Hi, I'm Bob Coleman. We're talking Main Street and the small business lenders who help it grow. Our first story is about Congressman Sanford Bishop. Last week in Washington, D.C., we had a cool event on rural lending. Congressman Bishop is very articulate. You're going to enjoy the clip. The reason why this man is important, and I got to read this here, I'm sorry, he's the subcommittee, he's the ranking member on the Subcommittee on Agriculture, Rural Development, Food and Drug Administration related agencies. What does that mean? USDA B&I lending programs. He's a big fan. I didn't know this. Agriculture is the #1 industry in the state of Georgia. I think you're going to enjoy what he has to say.
Good morning, good morning, good morning. This is the day that the Lord has made. Let us rejoice and be glad in it. I'm glad to be here. In fact, I have to say, I'm just glad to be, period. I'm glad to have the opportunity to be here with folks who are in the agribusiness industry as you are. Agriculture is the #1 industry in the state of Georgia. And of course, what you do is so vital to our rural communities and agriculture. And so I appreciate you very much. The people in Georgia appreciate you very much, and rural America certainly appreciates you. I want to start out by saying thank you to my friend, my fellow rural development and small business advocate, Mike Thomas, for inviting me to be able to speak with this very, very important group today. Everybody in this room has a history of working together on issues related to improving rural economies through sound investments, often by using the often overlooked financial gem administered by USDA known as the Business and Industry Guarantee Loan Program. I say it's overlooked because it has been reported that in 2016, lenders across the nation issued less than $1.3 billion of new B&I loan volume, with 50 lenders providing over 70% of the total volume. With a total authorized level of nearly $1.6 billion, that $300 million was potentially left on the floor. This highlights the need to raise the lending capacity for lenders, as well as increasing the authorized level of funding in the upcoming farm bill. I would assume that that would be something that would be of great interest to you. According to USDA, there are currently $360 million in active B&I loans in Georgia alone. These loans have created 827 jobs, saved over 2,000 more, and across the country, active B&I loans have protected nearly 100,000 jobs. That's because of rural lender groups like you. Thank you for what you do. Whether people know it or not, the U.S. Department of Agriculture has been working in behalf of rural America for decades, and not just for farmers and for ranchers, but for all the people that make up our rural communities, which include local businesses that create jobs that improve the quality of life for rural America. That mission is embodied by each of you in this room today, who use the authorities granted by the United States Farm Bill to extend the reach of Main Street into rural communities. Utilizing USDA's B&I, Community Facility, and Rural Energy for America programs, you have invested all over the country.
The SBA Inspector General released a report on improper payments. Why is this important? Well, whenever you get a check from the government on payment for denial of guarantee, the SBA is tasked with making sure we're doing it right. We're not being wasteful of taxpayer dollars, and we're not making improper payments. They identified 6 lenders. I'm not going to name you. It's in the report. For $5 million worth of guarantee denials. The reason why this is important, this happened back in 2015. 2 years after the fact, they want their money back. This is what Lance Sexton and I were talking about. Be careful with the takeaways on this. Is number one, When you get that check and that guarantee paid, that doesn't mean that you're off the hook. I guess it's never been codified, Lance, but 3 years seems to be, once we go 3 years, you should be okay. Right, Lance?
Well, and I think in most cases, if you're a good, prudent SBA lender, once you get paid, you're probably fine. But it's important for you to know that SBA does what's called an IPERA review. That's an improper payment review process that SBA goes through. And on the guarantee purchases paid, they will select a sample of those and review them and make a determination if it was a proper payment. If it's not, SBA has the right to send you an invoice. Now, what you do as a bank, because I've worked with the bank in consultation, if you get an invoice back, well, do you throw your arms up and send them a check? Probably not. I think I'm going to dig in and gather information and try to work with them now. There's a risk. I had one lender that said, I don't want to pay this. They refused to pay it. They were in the wrong. They lost their 750 agreement.
Yeah.
So,
and also, to be fair, the Inspector General does say, we want another bite at the apple, but the lender has the right to provide additional documentation. Lance Sexton, former deputy director of the Little Rock Loan Servicing Center, is Coleman webinar instructor extraordinaire. He does great work. He did a webinar on what to do when your borrower approaches 60 days being delinquent. I thought I'd play a clip of that interview for you, of that webinar for you. Very informative. Take a listen.
a workout agreement. Here are the requirements. Any workout agreement with a small business borrower needs to be in writing. That written document is going to include the terms of what, and the written document is going to include the following. It's going to include a list of events that cause default. It's going to include confirmation of all collateral, including the lien positions. It's going to include a acknowledgement that the SBA nor the lender is waiving any default right or remedy by entering into a workout agreement. It's going to include the forbearance period, the period you're going to put off enforced collection. And then it's going to identify those workout options we talked about: deferments, extension of maturity, reamortization, voluntary sale of collateral. It's going to list those items. Additionally, it will tell them what the events are that would constitute a default under the workout agreement, as well as the consequences of default under the workout agreement. It's going to include signatures and dates of the participant lender and any obligor on that SBA loan. Again, it's very important in this written workout agreement. I talked earlier about the SBA borrower in a workout agreement needs to provide consideration. You want to identify in the workout agreement clearly what that consideration is. And you want to identify what the consequences are if the small business borrower does not comply with the requirements of the workout agreement. So again, your workout agreement needs to be in writing and needs to touch base with these 9 items, as well as it does need to include a clear identification of what the consideration was that the small business owner provided to the lending institution to entice them to agree to a workout agreement.
And finally, our last story for this week is about the SBA 7A secondary market. We had a summit last week, the 10th annual summit. We talked about premiums. Yes, premiums are hitting 118. That's less than 0.5% on the market of the paper that is sold for that. This chart shows the majority of the paper is in the 113, 114 range. And remember, when we sell at 114, we have to split anything over 110 with SBA, which is actually pretty good. It keeps that subsidy rate down, so the lender is receiving 112. Take a look at this segment that I talked about on office hours last week with Lance Sexton. But I was in Washington, D.C., and we had 2 interesting events. One was the secondary market event. I shipped this out to the industry last week. Be sure and take a look at it. This is a great chart that was put together by SBA, and it shows the spread of premiums based upon loan size. Now, I don't have interest rate numbers in here, but you can see the predominant loan that's being sold to the secondary market are loans for under $500,000, and they're getting a premium. The average premium was in the range of 113 to 114, and premiums went all the way from 101 up to a high of 118. And you and I talk about the 118, but it's important to know the loans at 118 were less than half of 1%. So, but the average is in that 113, 114 range. And I think that's important for budgeting, and it's important to see the spread of what you can get based on the size of the loan.
Yeah. And the other thing is, I know we have a lot of participants that sell loans in the secondary market, and I certainly encourage it. It's a great way to create non-interest income. But the thing you have to remember, and the thing that I've witnessed in banks that I've reviewed, they sell them on the secondary market and they completely forget about servicing. You can't sell it on the secondary market and say, oh, I don't have any SBA requirements, because you do. And it still has to be prudently serviced. And if it defaults, it has to be prudently liquidated. So great way to generate non-interest income, but you still got to take care of the loan.
Thank you for joining the update today, supporting America's Main Street, America's rural Main Street also, one entrepreneur at a time.